Welcome to Filling the Gap, the role of business in conserving biodiversity. I'm Deborah Lair, CEO of Edelman Global Advisory, as well as the Executive Director of the Paulson Institute. We appreciate your joining us today. We know that it's a busy and stressful time. In fact, one of our colleagues on the webinar today was just evacuated because of fires in Italy. We know there are a lot of challenges that the world is facing: rising inflation, continuing supply chain shocks, growing inequality, lingering COVID variations, and rising geopolitical tensions, just to name a few. So why is it worth the time to talk about nature, about birds and bees and trees? It's because they're intrinsically linked to some of the existing crises that we're facing today. And business needs to understand the economic and societal implications of the staggering loss that's occurring. The statistics about biodiversity loss are terrifying. Populations of vertebrates have declined by a staggering 68% since 1970. 90% of the world's large fish have disappeared. And today, humans, or the livestock on which we depend on for food, make up 96% of the biomass of mammals on Earth. This loss is not only desperately sad, it also presents tremendous risks to human prosperity and well-being. The loss of pollinators alone, our bees and birds, could lead to a drop in annual agricultural output of more than 200 billion annually. Add in the non-food crops such as alfalfa, the main feed for cattle, and the impact rises to over $500 billion a year. If we use standard valuation techniques to calculate the value of this asset, just a tiny bee, it has the capital value of close to $14 trillion. To put that in context, it's equal to almost 75% of US national income. And there's growing evidence that biodiversity loss puts humans into contact with stressed ecosystems in ways that increase the risk of transfer of zoonotic diseases. It's no coincidence that during the last few decades of catastrophic biodiversity loss, we've seen outbreaks of zoonotic diseases such as SARS, MERS, Ebola, and of course, COVID. In fact, 75% of emerging diseases in the last century have been transmitted from animals to humans. It's not all doom and gloom, however. We're fortunate to have some of the leading thinkers on these issues to help us understand the dangers ahead. Fortunately, they're innovative thinkers who seek solutions to these challenges, and in this context, provide some hope. Simon Zadick, Chair of Finance for Biodiversity. Until recently, he was the Sherpa of the UN General Secretary's Taskforce on Digital Financing of the Sustainable Development Goals, Chair of the Migrant Nation Foundation, and Chair, of course, as I said, of Finance for Biodiversity. He really was a driver behind the growth of green finance. He saw the opportunities early on and now has turned his attention to trying to accomplish the same growth when it comes to biodiversity. We're so fortunate to have you, Simon. Rose New, who's the Chief Conservation Officer for the Paulson Institute, former WWF and Nature Conservancy, and she's the world's leading expert on conservation and climate-related issues with China, and now has turned her attention to other countries. Andrew Deutsch, Director of Global Policy, Institutions and Conservation, Finance in the Nature Conservancy, at the Nature Conservancy, sorry. Andrew's an innovative thinker and a driver behind how capital markets can be unleashed to promote conservation and climate change. So I'm going to start to set the stage with a quick yes or no question. Less than 10 years ago, investment in green finance was a philanthropic donation, but now it's part of the mainstream of doing business for banks. In the next decade, each of you, yes or no, will we see the same for biodiversity? Andrew, why don't you start?
Yes.
Yes. Simon?
Definitely.
Rose?
Yes, that's possible, but I believe a lot of advocacy and hard work are still needed to make that happen.
Great. Okay, a little longer than the yes, but absolutely right to clarify for us. So Simon, let's start with the fundamental question. Why should we care about biodiversity and its loss? Is nature basically a local issue for investors and the public good, unlike carbon? What do you wish more people understood about this issue?
So you've covered the catastrophic data, so I'm not going to repeat any of that. But I will say that 100% of our global economy is 100% dependent on nature. That we simply wouldn't function as a species, and certainly our economies wouldn't function. And we can see that, of course, as a tip of the iceberg. Food systems, coming under increasing stress, water supply coming under increasing stress. And indeed, if we count as nature things under the ground, and we count as nature the quality of air, then we have to begin to wrap in some of the energy issues and climate issues that kind of all make up an integrated whole. Why does it matter at a macro level? That seems completely self-evident and requires no further discussion. Why does it matter at a micro level? So for an individual enterprise, clearly it matters because in unlikely ways often, one's global supply chain and therefore business continuity is dependent on nature's bounty, whether it be ecosystem services that deliver certain types of minerals, whether it be the supply of water, or whether it be many other ways in which every business's supply chain has aspects of nature on which it critically depends and would find extremely hard to substitute out of, certainly in the short term. And of course, that is equally, if not more true, at a national level, or indeed simply at a community level. That's self-evident when you think about Brazil or Indonesia or other nature-intensive countries, Costa Rica and so on. But it's also true of countries that we might not think of so directly in that way. As you said at the beginning, Deborah, I'm sitting in northern Italy amidst a sort of breakout of extraordinary wildfires across northern Tuscany. But actually, in the context of this conversation, the River Po, which runs across northern Italy, 85% down on its normal levels, major parts of the rice valley, effectively the source of much of the world's risotto rice, destroyed this year, along with much other agricultural products. So it matters for individual businesses, but most businesses don't know. And it matters for countries who often don't know, but are struggling to figure out what to do.
Yeah, very serious. So, Rose, help us understand what are some of the biggest drivers then of this biodiversity loss? How did we get to this moment of crisis, and what do you see as the biggest threats to nature?
Biodiversity loss is a global phenomenon, but the scope and rate actually vary significantly in different regions of the world. WWF's Living Planet Index measured each region's average decline between 1970 and 2016. Latin America and the Caribbean region declined by 94%, Africa by 65%, Asia Pacific by 45%, North America only 33%, Europe and Central Asia only by 24%. So WWF's Living Planet report in 2020 identified 5 major threats to global biodiversity and calculated actually proportional impact of each of those threats across all the region. And unsustainable use of land and ocean counts for 50%, while overexploitation of wild species only for 24%, and invasive species for 13%, pollution for 7%, and then climate change only for 6%. The fundamental reason for this crisis is that our global economic, political systems and also financial market do not properly account for the services nature provides us. Many of nature's benefits are considered free. So market pricing is very difficult and sometimes unfeasible. Therefore, those who conserve nature are not adequately and financially rewarded, while those who also damage nature are not appropriately punished. I do not see those threats are reduced significantly if valuing nature is not mainstreamed into the global political, economic, and financial decision-making processes. Thank you.
Great, thanks, Rose. So you've identified actually some really important points. One, that the loss seems to be concentrated in emerging markets, that it's considered a free good. And how do we then create the kind of political will that's necessary to focus on biodiversity, but also the structures to attract private and public capital into protecting it? So, Andrew, you are an expert in this area. What do you think about the economic and financial aspects of biodiversity loss and what Rose has mentioned? And how do you assess those risks? And how should business start looking and accounting for the risks in biodiversity? Now, I know those are two big but related questions, but walk us through that.
Yeah, and I'll just start by saying much of the thinking about how do we measure biodiversity loss and the impacts and dependencies that companies have on nature is sort of piggybacking on the climate finance world, which is probably a good 6, 8, 10 years ahead. And in some ways, the climate world has it a lot easier because they're just measuring one thing, carbon emissions. And the biodiversity world has it harder because we're measuring a lot more things and it's much more location dependent. In the climate world, a ton of carbon is a ton of carbon, and it doesn't matter whether it comes from a coal-fired power plant in West Virginia or comes from deforestation in Central Africa. But those impacts matter in the climate, in the biodiversity world. So let me start by saying, how does the business world right now see this? And I'll view it through what's the lens of what the business community is asking for in the current round of negotiations on a new set of global biodiversity targets. So I'm referring to the coalition called Business for Nature, which consists of the World Business Council on Sustainable Development, the World Economic Forum, the International Chamber of Commerce, and others that have formed this coalition that have put forward some advocacy points of what they would like to see governments sign up to shape and inform how business relates to nature in particular. It comes down to, I guess, 4 key points. So the first is that they want to see the world agree on a commitment to a nature positive economy. And so this is modeled on the Paris Agreement that says, in Article 2 of the Paris Agreement, the world should align its financial flows towards a carbon neutral world. And when that was agreed in 2015, the negotiators didn't quite know what that was going to look like, but the point was to send a signal that the direction of the global economy is towards a low carbon future. And so what business is calling for now is a signal within the biodiversity world that the world is headed, the global economy is headed towards a nature positive future, which basically means halting and reversing all of the negative trends that Rose articulated just a minute ago. The mechanisms to do that the businesses are calling for is asking governments to require mandatory disclosure of risks and dependencies and opportunities on nature, and a requirement that companies would be responsible for reducing their negative impacts on nature by 50% by 2030. It's a pretty bold target because we're not quite sure how to measure it, let alone how to actually do that. But the idea is set that expectation and companies will figure out how to do it. The third big piece of it is looking at how do we remove the harmful subsidies that are shaping a lot of behavior in the corporate world in ways that aren't helpful to nature. Like the world spends something like $4 to $5 or euros or pounds subsidizing the destruction of nature compared to the dollars or pounds or euros that it spends supporting nature. That's a pretty irrational thing to do when, as Simon said, 100% of the global economy depends on nature. So why are we disinvesting in that asset class in a sense? So even the businesses are calling for the reform and repurposing of environmentally harmful subsidies to make them neutral or ultimately positive. And depending on how you count, it's about $500 billion a year in subsidies that are harmful to nature out of about 1.8 or 2 trillion dollars worth of overall environmentally harmful subsidies. 500 billion of those, primarily in the agriculture sector, are specifically harmful to biodiversity and the natural capital flows that we depend on. And then the last point to look at, then the question becomes, how do you do this? And those tools are being developed, again, sort of piggybacking on the climate risk disclosure world. So you've got the Taskforce on Nature-Related Financial Disclosure, which is just last month has put out its second version of the toolkit by which companies can measure what their impacts are, what their risks and opportunities are, what their dependencies are, and then start to set targets to reduce those over time. And they put out some guidance on the framework. And again, what's different from the climate world is it's kind of like the real estate market. The most important thing that matters is location, location, and location, because your risks and dependencies and opportunities are going to be very location specific. So the next step is they're going to try and develop guidance that will be sector specific, because the agriculture, say that, beef and grazing is going to look very different than open water fisheries, is going to look very different from timber, et cetera. So I'm going to try and put together some guidance. The other important tool that's out there is from the Finance for Biodiversity Pledge group, which has put together a new document that just came out last week on the 6 or 7 different methodologies that are out there to measure companies' impacts and dependencies on nature. And they sort of walk through a flow chart of what the different methodologies are, how they compare, and which ones could be more applicable and helpful. So I sort of say this is the cutting edge of where the business world is right now, the actors in the real economy, to figure out how to apply those methodologies and their impacts and their dependencies, and then set targets for reducing them over time. And so bottom line, a bunch of the companies now and corporate actors in this space are calling on governments to set mandatory disclosure and impact reduction targets over time.
Well, great, Andrew. I think that's a really important point that business needs to be focused on too, that we are likely to be looking at mandatory disclosure when it comes to nature risk, and it is much harder to measure. And these issues coming out of, emerging markets, and they tend to be nature intensive countries who depend on nature for their economic success and as a source of economic resilience. So Simon, as Andrew mentioned, your work is cutting edge when it comes to looking at how we could consider innovative financing when it comes to nature and start to put a value on. And I do think we should back up just a minute. And if you can look at how we look at climate and how we look at biodiversity, that they're not always, there's a lot of discussion that maybe we need to change first and then we can focus on the biodiversity, but they really need to be done in tandem, don't they? Because they're so interlinked. And so as you look at this and what you've done in green finance, can we start to see a consideration of nature reflected in sovereign debt markets, for example? And how would rating agencies begin to take these nature risks into account?
Yeah, no, that's helpful. And I'll try and build on Andrew's super helpful kind of landscape view, which I think covers a lot of what needs to be highlighted. So clearly, stage one is know what your impacts and dependencies are, figure out where the data flows are, not an easy task, build it into your risk management systems. And as Andrew and you, Deborah, have said, there's the disclosure bit, either voluntarily or increasingly mandatory. We can already see in France, there's mandatory reporting under so-called Article 29 of biodiversity related impacts. And we see that also coming through in a new set of instruments that are not simply around corporate disclosure. So for example, the EU and the UK are imposing requirements on businesses, not necessarily financial institutions, to disclose the impact in their value chains on deforestation. And that, of course, will flow through to the financial sector that will then have to begin thinking about those risks in different ways. These sorts of effects are indeed, and these sorts of tools are already crossing over between climate and nature. So a zero deforestation imperative and a due diligence requirement that still has no penalty, but clearly that's the direction of travel, is of course about nature. It's about trees and many other aspects of biodiversity, but it's also critically about the particular ecosystem service of carbon sequestration that trees can deliver. So it's also about climate. And we'll see a growing number of those sort of due diligence requirements that perhaps don't exist in quite the same way in the sort of carbon part of the climate space alone. Now, building on Andrew's points of the kind of segue through from climate to nature, we're beginning to see the sort of migration of nature-related issues into different parts of the financial system. And Deborah, you've mentioned sovereign debt markets. I'll spend a couple of minutes on that. Obviously, an area where both Finance for Biodiversity and, in fact, the Nature Conservancy and others are very much involved. A history of nature debt swaps that, in fact, TNC has really led on is now migrating, if you like, into a sort of second generation within sovereign debt markets as we begin to see instruments emerging that link nature and climate performance directly to the cost of capital. So these are so-called KPI-linked sustainability bonds. And some folks who are listening in will know that that's already begun to emerge within the corporate bond market, and we're now beginning for the first time to see it emerging within the sovereign debt market. I think this is a very interesting development. One perhaps sort of iconic example of that over the last couple of months has been Chile issuing a sustainability-linked sovereign debt bond worth $2.1 billion, 3 times oversubscribed, linked in fact to renewables investments, so not explicitly about nature, although to your earlier point, Deborah, nature and climate connect to each other in all sorts of different ways. And then I wanted to kind of add in perhaps, less as a sort of wonderful example, more of a challenge, which is a challenge that Axel Weber, previously the chair of UBS, posed to me a couple of weeks ago. He said, so what's the equivalent of the technology play in climate in nature? Yeah, and the point, of course, that he was making was that not the financial community doesn't care about climate, but the investable domain that we can think about arising through climate policies and other standards has in part to do with the emergence of clean energy systems in the production of electricity, in mobility, now in built infrastructure, and gradually in other areas. And so these are huge technology plays that give not only large landscapes of possible investments for the financial community and obviously business opportunities for businesses more broadly, but also offers ways in which those opportunities can be packaged up into sort of commoditizable, rateable assets that make them attractive and digestible by by capital markets. And of course, the question is kind of what does that look like in what Andrew has quite rightly said is a sort of messy nature space, where transforming a piece of land to make it nature positive and build a revenue model out of it, is that really a commoditizable, rateable asset that one can see hundreds of thousands of equivalents emerging over the coming years? And I think we see positive news in that area. So the answer I gave Axel Weber was, if you think about the equivalent of energy to climate as being food to nature, it's by no means a perfect analogy, but it's a kind of one helpful lens to think about the topic. The food system is an $8 trillion a year food system, so 8-9% of the global economy, billions and billions, in fact, trillions of dollars worth of assets. And we begin to see, for example, in the area of alternative protein, in the area of vertical farming, we begin to see the equivalent of food delivery infrastructure assets beginning to emerge. So really investable infrastructure. And when you talk to many of the large asset managers, they're thinking about those sorts of developments in that kind of way. And similarly, as you sort of swing across and think about those messier forms of land transformation, whether it be regenerative agriculture in this form or that form or other forms, we begin to see organizations like Intrinsic Exchange in the US working with the New York Stock Exchange, or the Land Banking Group now coming out of Germany, out of Munich, all basically focused on how you can translate these messy business models that involve nature positive land transformation into rateable assets that capital markets can cope with. So that's not for one particular type of infrastructure or investment opportunity, but we see these new sort of super highways beginning to build out that will begin to deliver rateable, investable assets linked to nature positive investment.
Great. Well, and that's very encouraging that we start to see that. Because as Hank Paulson, our chairman of the Paulson Institute, always tells us, if we're going to be investing in these kinds of activities, investors expect to make a profit. That's not charitable donations. And so you need to create that right framework to attract the kind of funding that we need, because the funding isn't going to come from governments alone. In fact, often it's only going to be 5 to 10% of what's needed. Rose, let's turn to you because I think it'd be helpful to focus in on one country. And you have done a tremendous amount of work when it's come to conservation and other issues related to China. And so let's focus on what is China doing? They've really been an innovator in biodiversity. They have made this a priority, but we're just starting to see the beginnings of it. What is happening there, and what are some of the policies that we're starting to see coming out of China that could be expanded to other countries? And what do you see as some of the potential outcomes of the CBD COP, which they'll host the second part of, even though it's in Canada?
Deborah, maybe I will go to another question before answering your second question about why China matters, why China is important for global biodiversity conservation. Two major reasons I will mention. First, many people don't know actually China is vast in size and complex in topography and stretches multiple climate zones. So China hosts very rich and unique biodiversity, unrivaled among the countries located at the similar latitude. Many people will be surprised if I say China ranks number 3 globally among the 12 mega diversity countries. So China's conservation effort at home really has a global significance. But more importantly, second reason, China is home to about 1/5 of global human population and second economics in the world. So China's environment footprint goes beyond its national boundary by international trade and investment. I will give 2 quick examples. First one, China is the largest and second largest importer of soft commodities such as soybean, timber, palm oil, beef, which have very significant deforestation impact in the production countries. So if China does not demand its trading partner to eliminate deforestation from those supply chains in the production countries, then global deforestation will not be eliminated and ultimately stopped. Second example, many people know China's Belt and Road initiatives by the end of last year has investment project in 147 countries across the whole world. Many of those projects are, infrastructure project, extraction of mineral resources, and so on and so forth. And if Chinese government, financial institutions, and also companies are working on those projects, do not take serious measures to manage those risks, those impact of on the environment of those countries, the biodiversity in those host countries will be jeopardized, obviously. So now, go to your second question. Some people told me recently, it seems that environment agenda are no longer on the priority list of top Chinese leadership. I would say it might be true. They are very, very busy dealing with, COVID and declining of economics and so on and so forth. But I truly believe that once the COVID pandemic is over and economic situation improves in the future, I hope in near future, then Chinese government will continue strengthening of the policies and regulations on protecting nature. Because limited time we have today, I will not go over a lot of details, but I will share 2 very quick examples. Last July, China launched its national carbon emission trading system, and it immediately became the largest carbon market in the world. The problem currently only applies to electricity or power generation sectors with about 2,200 regulated companies. But in the next year or 2, this problem will expand to cover about 8,000 companies in 8 industrial sectors. So there are a lot of opportunities and challenges in that carbon market. Secondly, March this year, 4 central government agencies jointly issued a document, guidelines on greening the Belt and Road initiative. And I'm really, really impressed by 21 very specific guidelines, including such as increasing investment in renewable energy, stop any new coal-fired power plants overseas, strengthening the management of environment risks for infrastructure projects, greening commodity supply chains, and also expand the scope of green finance products, and so on and so forth. So those guidelines are very specific, very concrete, and I hope those guidelines will be implemented in the near future. Thank you, Deborah.
Great, thanks, Rose. And I think two important points that come out of what you're saying. One, China does have the largest carbon exchange in the world. And one of the fascinating statistics around it is that not only in launching with one sector, energy, where that accounts for about 30% or so of China's emissions, the interesting thing is it accounts for 15% of global emissions. And if China is to include these other major polluting industries, 6 or 7 of them, as Rose mentioned, it could cover up to 30 to 40% of global emissions. Now those global emissions will be brought under a Chinese trading scheme. So it's a very interesting thing just to think about, particularly in the context of China's Belt and Road, how they're going to be affecting the price on carbon. They still have a lot of challenges ahead in getting this exchange up and running and adding new industries. They're actually behind in the plans, but still, they're very focused on how they can move forward. And let's hope, Rose, as you point out with these regulations, that not only are they good in putting them out, but that they're enforced, which is the critical thing. So I think it would be good to now that we've defined what some of the issues are that we're facing, can we find solutions? And so, Simon, let me come back to you. And what do you see as some of the most significant and viable conservation opportunities out there right now?
So definitely Andrew is better placed to describe maybe quite specifically a couple of the big sovereign debt deals, particularly in Belize, that TNC has been involved in, because I think it really exemplifies some of the comments I made a little bit earlier, and that can unlock finance that can be invested in nature and climate. But importantly, it can also reduce sovereign risk, and so reduce the cost of capital across a debt portfolio over time. I've made the observation that we have to think carefully but also ambitiously about what the equivalent of renewable energy or clean energy systems are in the food system. And that's urgent, obviously, because of the impact of food on nature and climate, but it's also urgent because, as we see in the current situation, significant parts of our global food system are fragile, to say the least. And so new infrastructure that is more local to markets becomes quite interesting and of additional interest, if you like, given what we're experiencing, particularly in the areas of wheat, fertilizer, and associated phosphate cross-border sales. And then perhaps just to touch on something we haven't really got to yet, which is, can we imagine broader nature credit or offset markets? Now, obviously, we all know that there's something called carbon offset markets or carbon credit markets. And for those of us who are traders or have delved into the topic, we know that it's meant to ease the pathway towards zero by channeling funds from those that can't themselves reduce carbon sufficiently in their own operations into investments that are lower cost per ton of carbon achieved, hence offsets. Question is, how do we relate that all to a broader nature, particularly biodiversity space? And we begin to see for the first time, arguably a much more complex story emerging that I think, and more people think, will lead to a new set of biodiversity credit markets. Now, the first round of that is likely to be biodiversity benefits associated with carbon offsets and offtake agreements. So if you like, carbon plus credits. And we already see that beginning to emerge both informally and as part of new certification products that are available. And that's reputation push in the main, but clearly linked to an understanding that purely buying carbon service from broader biodiversity can actually have very negative biodiversity effects unintentionally along the way. So we'll see carbon credits beginning to become bulkier, if you like. And I think we'll begin to see, a little bit back to some of the comments again that Andrew made, increasing regulatory pressure and policy pressure, as well as reputational pressure, for businesses to begin to demonstrate, as they have been pushed towards showing net zero pathways in their own operations, we'll begin to see the same in what we might call a sort of nature positive pathway. Yeah, there'll be questions to an HSBC or any other financial institution or a Unilever or a JBS meat production in Brazil asking, you know, don't show me today only how you're doing, but show me that pathway down. And out of that will begin to become a growth in biodiversity credit markets. Now, you know, Andrew and I and most people on the call will shake their heads and go, but if there's no equivalent of a carbon ton and a litre in a water in northern Kenya bears no relationship to a litre of water in the canals in Amsterdam, how on earth can we build credits, you know, that have integrity and that can cross jurisdictions, so not just local? And indeed, those are real challenges. But what we're seeing is an armada of initiatives emerging to try and deliver variants of effective biodiversity credits. And I have no doubt that the ingenuity of scientists working with market players and investors will develop a new generation of biodiversity credits, and markets will arise on the back of that. Back to you.
Great. Thanks, Simon. And you raise a good point about some of the work that the Nature Conservancy is doing, and TNC and the Paulson Institute put out a report, Financing Nature, looking at what some of the economic challenges are. And Andrew, would love to have you elaborate a little bit on the report and focus on what are some of the key policies that are needed to close the biodiversity financing gap, and what needs to be done to reduce economic activities that harm nature, but how can we invest and generate? And TNC's been doing some incredible work and have some pilot projects, and would love to hear more about how those are going and a little what is the role of business in supporting that?
Sure. So let me first compliment my co-author on that report, Rose. So what we looked at in that report was, what's the size of the current financial flow for biodiversity? It's around $140 billion a year. What does it need to be? And then subtracting one from the other, what's the gap? And so we calculated the gap is about $700 billion a year, the total need being somewhere around 850 to 900 billion a year. So a little less than 1% of global GDP. And then the question was, how do we close that? And where do the big opportunities come? The majority of funding for conservation and investment in nature right now is actually domestic resource mobilization by governments. So think about money that governments are spending on cleaning up waterways, on running national parks and protected areas, on agricultural easements and what have you. So mainly it's government funding, and there's significant opportunity to expand that. But I think if it boiled down the list of 9 or 10 different recommendations we came up with, we sort of cluster it into 3 things. So one is the agriculture sector. As Simon said, like food and agriculture is to biodiversity as energy is to climate. And it shouldn't be surprising. The IP Best report that came out a few years ago identified agriculture and land use change as the #1 current threat to biodiversity. When we did the cost estimates of what's it going to cost to improve and restore nature around the world, the agriculture sector, the transition to sustainable agriculture, forestry, and fisheries, fixing the food system, was the #1 cost. But the good news is, as Simon said, it's an $8 trillion economy, and we've got $500 billion a year of harmful subsidies in the sector. And so it's not a question of finding new resources. It's a question of changing the regulations, the rules, and the incentives to spend that money and invest that money in ways that restore nature rather than degrade it. So that's the first big sort of solution set. Comes in the agriculture sector, particularly around harmful subsidy reform, the transition to sustainable regenerative agriculture. Second biggest sector is probably the infrastructure sector. The world needs to spend something like $3 or $4 trillion a year in new infrastructure development, mainly in the developing world, to meet the Sustainable Development Goals. Climate itself is a big driver of that. So some of my science colleagues at the Nature Conservancy have done the calculation to show that the single biggest near-term threat to intact ecosystems in the United States is the build out of the renewable energy infrastructure that we need to meet our climate reduction goals, right? We need to build an awful lot of new wind and solar plants and a whole bunch of new transmission infrastructure to get it from where it is to where the need for it is. But they've also shown that there's 7 times as much land available that's already degraded that we could build it on, rather than impacting existing natural assets. So there's a lot that can be done to sort of green the gray infrastructure development that we need through smart spatial planning and good design principles. And then also the application of biodiversity offsets, right? So that when there are impacts, you create compensation mechanisms that can generate some of those nature-related markets that Simon talked about. And then there are also big opportunities around investing in nature as infrastructure, particularly for flood control, flood risk management, dealing with coastal inundation, and a range of other traditional infrastructure needs where nature can actually be the infrastructure provider. So the infrastructure sector, through a variety of ways, is the second probably biggest cluster of things. Both of those go to this question of how do we close the financing gap, or to put it, how do we finance green, right? Meet our biodiversity needs. The big enchilada, so to speak, though, is how do we green finance? And so the finance sector itself is probably the biggest opportunity. And if we can put in place all those things that we need around nature risk disclosure, corporate commitments to reduce negative impacts and increase positive impacts, and ultimately get to, as Simon said, a rateable investable asset class around nature. If we can transform the global economy to be nature positive, we don't need to worry about all those other specific nature finance mechanisms, right? Because the world will be doing it as a matter of course. So that's sort of the long-term vision of how the global economy would shift. So to bring it back, so 3 key sectors: agriculture and food sector, the infrastructure sector, and the finance sector. If we get the transitions right in those, we can more or less solve the problem. And I'll just go back to your other question on some of the debt work that we're doing. So we did, so I was told sort of debt swaps 1.0 was back in the world of the Tropical Forest Conservation Act, and it was structured under US law where the US would forgive a certain amount of debt in a developing country in exchange for putting the money that otherwise would have been spent into a trust fund to pay for conservation activities. Kind of cool, didn't change the macroeconomics at all. A few years ago, we did a deal in Seychelles where in exchange for restructuring some of their debt, complemented with some philanthropic capital, they set up a trust fund that's funding marine protected areas, and they did a marine spatial plan for their entire exclusive economic zone. It's the size of Germany, so it's a pretty big piece of ocean, even though it's a small island country. But the finances was small. We did a deal with Belize last year where we restructured their entire private corporate debt. It was their whole Eurobond portfolio, which was about 10% of their outstanding debt. It was about $500 billion in outstanding debt. And what was cool was that we used other people's money. In the Seychelles deal, it was on our balance sheet, which is kind of weird when you think about it as a small, a large nonprofit doing sovereign debt deals. But in the Belize case, Credit Suisse acted as the broker, and because the debt was trading at a discount, was able to restructure the debt at a discount and float about $350 million of new debt into the market that restructured the old debt in exchange for marine conservation commitments. That's particularly important in Belize because it means protecting the Mesoamerican reef, which is the source of the pretty beaches that attract the tourists and the fisheries sector, which are critical economic sectors in Belize. But the next step is can we go to a world where that becomes much more mainstreamed, where countries recognize that their sovereign debt markets can be tied to managing climate risk and nature risk and helping transition their economies to be low carbon and nature positive. So think about the IMF changing the way that it calculates its debt sustainability loads for these countries to incorporate climate and nature risk. And then, as Simon said, attaching, as countries issue new debt or restructure old debt, attach these KPIs around climate conservation and land use to improve their environmental performance and generate new funding to support environmental performance as part of the way they manage the sovereign debt. And in fact, linking climate and conservation risk to solvency risk. In a $9 trillion developing country sovereign debt market, if we could make that transition, it's an order of magnitude or two above everything else that we've been talking about here in terms of the mechanisms to finance green.
Great. Well, Andrew, the numbers that you use just sound staggering at times, but one of the favorite statistics I have from the Paulson Institute is that when you consider the amount of money that's needed to invest every year, as you pointed out, it actually is roughly equivalent to what the world spends on soft drinks. And so when you put it in that context, it seems much more reasonable and achievable. And you've made a really important point that many of the funds that are needed actually have already been committed. They are just in being used, as I liked the term, perverse subsidies. And if we can move them to being positive subsidies, encouraging nature rather than destroying it, it's not that we have to actually appropriate additional funds. It's simply a redeployment of funds, which you would think would be a lot easier, but we know how politics are. One of the other encouraging things related to the financial sector, I think, is the fact that under the UK leadership, the G7 has taken up biodiversity as one of their issues. And it's now on the agenda of the G7 and on the agenda of the G20. So it's no longer sort of in the realm of the ministries of the environment, and it's starting to become in the mainstream of the financial institutions. And so hopefully, and Simon, you were at the forefront of this as we saw this development in green finance. Hopefully we will start to see the same progress when it comes to biodiversity. So one last question before we turn to our audience questions, because we do have a number coming through. Let's close on an optimistic note. And there's a lot of doom and gloom related to the environment, but what gives you hope for the planet's future? Simon, let's start with you.
Goodness. Yeah, someone sitting in the middle of Italian wildfires asked that question. So, what gives me hope is, faced with crisis, we're extraordinarily innovative. And as we begin to embrace the complicated reality that we're heading for a 2 to 3 degree world with significant and growing fragility in nature, actually facing that openly allows us to unlock one of the great capabilities of humans as individuals and collectives, which is the way we design solutions. I think actually, if I can just add one sentence to that, as long as folks continue to be fed a message that the environment is terrible, but we can keep going with incremental change, we will fail to unlock those innovations. And so I think it's timely to treat all of us as kind of adults and serious and really face the kind of quantum innovations that are really necessary to make a difference.
Great, thank you. Rose?
The slogan, nature is everyone's business, inspires me the most. In the past, nature conservation used to be only responsibility for governments and also NGOs. But now more and more business leaders and even general public are not only participating, but leading the way in some areas for protecting the mother nature. So I'm very optimistic about the future of our planet.
Great. And Andrew?
This is going to sound funny, but to be personal, my nephew, and I say that because my nephew recently graduated with a degree in architectural engineering. He now works for a company that designs and builds skyscrapers in Philadelphia. And we were chatting the other day, and they're working out how to manage water flow and rainwater and wastewater management, and they're designing a set of natural infrastructure solutions to use nature to help solve the engineering problems. And he does a lot of work around energy modeling from buildings to reduce the greenhouse gas impacts and the energy costs of running those buildings. So the point is, he's not an environmentalist, but he isn't by ideology, but he is an environmentalist by practice, in that He cares about this stuff because it's the cutting edge technology in his field, and he's a young guy who wants to advance his career. And designing with nature and low greenhouse gas emissions is the cutting edge that's attracting the new talent and is the way forward in his field. And that's what gives me hope, because it actually shows that the technology and the practice is changing to be aligned towards a low carbon, nature positive world.
Great. Well, that's a terrific note to end on. And it really is important that we look at how this can be mainstreamed into both the technology world and the financial world, that it's no longer just, as Rose pointed out, part of the charitable giving, part of the NGOs, but really to take heart that we can see it slowly starting to come into the mainstream, and at least we're having the discussions about it in context of G20 and other international institutions. So turning to the questions, what can individuals do to push for biodiversity support and protections from the private sector? And what role can business play, and should they be anticipating? Simon?
Sort of good cop and bad cop. So the good cop is consumer power, your pension policy, if you've hopefully got one, kind of where your savings go, asking your bank what they're doing, all of those things that we have cut our teeth on actually prior to the climate agenda, really around workers' rights and stuff like that back in the 80s and 90s, and obviously a longer history before that. But I also think that pressure is needed, and pressure on some of my best friends in the financial community. And so if I can give you one example, just to sort of concretize it, today, environmental crime amounts to $300 billion a year, the fourth largest source of illicit financial flows. And nature crime is a major driver of nature destruction and profoundly inequitable and violent circumstances at the community level, particularly as it relates to indigenous communities. In fact, the investment community, not investing in nature crime, but say investing in food systems, are unintentionally benefiting from those environmental crimes, in that the companies they're investing in are earning higher returns by accessing underpriced ecosystem services, which improves the risk-adjusted returns of investors. We need financial institutions to step up and go, we commit to there being no nature crimes in our investment value chains, and we will develop the right due diligence mechanisms to ensure that that does not happen. And I have to say, out of all of the possible regulatory and liability developments that could happen, our bet at F4B is that this single one could make the biggest individual difference.
Wow, that's fascinating. Andrew?
So I do think it's worth spending a lot of time paying attention to what's coming down the pipe around nature risk disclosure requirements. We're hearing from a lot of our corporate partners coming to us saying, we understand how to measure and disclose on climate. We need to figure out how to do it on nature, because our customers are asking us about it and our investors are asking us about it. So the development of the methodologies that TNFD and others are doing, I think, is going to be critical. And as Simon said, we're starting to see movements towards, in the regulatory world, starting from climate, but around getting deforestation out of supply chains. And we're seeing regulatory moves in the EU and the UK markets and a few other places. And that's going to, I think, be the first step towards broader requirements around nature risk disclosure and impact disclosure and reduction overall. So I just see, watch this space because it's coming.
Yeah. Rose?
A nature positive and the zero emission world is definitely a vision, gain a lot of traction and also momentum worldwide. So companies leading the way will gain competitive advantage, I believe. I would like to maybe figure out one specific categories of companies who are working on soft commodities, both in trade and other processing maybe industries, to put deforestation zero in their supply chain, they can make huge difference for fighting and eliminate global deforestation.
Yeah, that's great. And I think we may have answered the other question, which was someone wrote, they're a firm believer we need climate and biodiversity hope. Otherwise, people will become apathetic and then not act. In a world seemingly overwhelmed by crises, where do you find hope for biodiversity? And I think we touched upon that. I don't know if you have like a thought or two to end us on a positive note as we come to the conclusion of what individuals can be doing to help on this. Simon.
I mean, we haven't made the point, which is blindingly obvious, which is climate change we're just frightened of, but nature we thrive within and as part of. And so we forget that the difference between the carbon story and the nature story, and I exaggerate to make the point, is that nature is part of our identity, it's part of our culture, it's part of all of those things, whereas climate is just a reason to be absolutely frightened. Yeah, and so, of course, you know, we see lots of attempts, Attenborough and others, to bring that to people, to remind them, but I think that has to continue, can inform all generations, and we must be cautious that the technocratic folks who are focused on risk data and so on and so forth don't forget that actually we're dealing with something fundamentally to do with identity. And I'll just sort of conclude on that by saying the most recent IPBES study, so that's the intergovernmental body that looks at biodiversity stuff as opposed to climate stuff, is interestingly called valuing nature, and its principal story is the importance of maintaining the multifaceted way in which we value nature rather than overly focusing down on very singular approaches. And I think that's the same message, that we value it as individuals, as families, as communities, as nations, as tribes, and that shouldn't in any way be ignored.
Andrew or Rose?
Andrew, go ahead.
So I'll just make the point that there's political power in attachment to nature. We've done a lot of polling across the US, and nature is one of the things that actually unites people, particularly in locations because it's relatable. And a couple of years ago, we ran a ballot measure in Texas, asking people to tax themselves to pay for water conservation in the recharge areas that would protect the aquifers for Austin, Texas. And we won. Now, you think about it, taxing for the environment in Texas, but people understood the connection between conservation of those areas for the recharge water and their ability to turn on their tap, to water their lawn, to fill their pool, to clean their car, right? Because there's a very real attachment to nature and people are willing to invest in it, or in that case, tax themselves, because of the connection to nature and the very tangible benefits that they get at the local level. And I would say there's salience in that for politicians and for corporations looking at their investors and their clients. So just remember, like, the nature stuff is local and people really do care because they get the connection.
And Rose, a final word?
I would say every single person in this planet will determine the future of our only home. And the increasing environment awareness of general public across the whole globe or whole world is the one give me hope. Everyone can do a little bit more for environment and nature. And if we get all the synergy of individual effort made by every one of us, then I think our home will be safe and shade in the future thrive.
Great. Well, I think that's a perfect tone to end it on. At least there is hope. And if we can pass an increase in taxes related to nature in Texas, there's definitely hope here. So many thanks to our panelists for joining us. Thanks to the audience for listening. We know this is an incredibly important issue that's only beginning to get attention. So There'll be so much more. And as Edelman Global Advisory, it's an area that we're going to continue to focus on to make sure that our clients are prepared for what's ahead. Thank you so much, and thanks to the audience. Bye.
Thank you.
Thank you, Deborah.